Okay, welcome everybody. This is Andy Pedraza with Special Effects Academy, and this is our start of the week session for August 26th of 2018. Going to be looking at the week that ended and the week that's coming up. Our agenda, as usual, is going to be a review of the prior week, our currency strength meter, the fundamental announcements for the week that's beginning, look at the major pairs and the daily charts, any setups we see in progress, and a few parting words. On the long-term ledger, we had entered the week all cash. We did open two new trades, both of them shorts, USDJPY and USD Swiss. At the end of last week, one of them was at a deficit, the other one was at profit. The USDJPY currently is carrying about 50 to 60 pips of negative on that trade. Again, long term, not that concerned about it at this point. And USD Swiss is still carrying a bit of profit as we start out the week. On the short-term account, not as pretty. We did have a pretty bad week. Most of the trades went against us. The week was the pairs were going in both directions, just taking turns day by day. So not this week to trade. However, we do follow a system, and we do expect weeks like this. The month of August itself is still carrying more than 15% profit, even taking into account the week. So all in all, also not a huge concern. We do have two open trades held over the weekend, which were and still are at profit. So the week wasn't as bad as it looks, given the two open trades. And indeed, we may see those move deeper in our favor. Too soon to tell. They were looking good at the end of the week, however. So it is what it was, and we'll continue doing what we normally do. Again, we expect there to be weeks that are negative. That's simply a part of trading in general, and the results over time are the key thing. Folks, if you're not talking, if I can ask you to mute your phone, that would be appreciated. Thank you so much. Notes and opportunities for improvement. As I said, tough week. The market whipsawed for the bulk of it. Overall, the month is still looking good. August to date, over 15% growth. And again, this is what trading short term is like. You do take a few steps back and every now and then a great leap forward, which over time means account growth. That is what we have historically done, and that's what's been, put it in a nutshell, paying the bills. So no changes there. It's operating as intended. The two trades that remain open over the weekend were the EURCAD long and Euro Swiss long, and both were at profit on Friday at market close, and the market is now open. They are still carrying a nice chunk of profit. The relative strength meter for the week of August 26th, we're looking at the left-hand side. We're looking at 2 weeks back, and the right-hand side is the week that just ended. Most of the volatility 2 weeks ago, the week that ended August 17th, was based on the metals. The Forex market actually didn't move much. This week that just ended, however, saw a nice shift in the market. We had almost a 2.5% of volatility in the Forex itself, with some of them moving quite sharply, including the JPY, probably the one of those that moved the most. JPY did depreciate against pretty much every currency out there. Aussie had a middle of the pack week, as did the CAD. The Swiss had a better week. It only lost ground against the euro. And the euro, in turn, had a pretty good week, gaining against everybody else. Pound, win some, lose some. So in general, the pound is still not having a good period. But it did hold its own against almost everybody except for the euro and the Swiss. JPY, already covered, had a horrible week. Kiwi dollar, middle of the pack dollar, also had a pretty bad show, only gaining ground against the JPY. And the metals were still moving quite heavily, more so gold. Gold regained quite a lot of ground over this week, whereas silver again continued losing, but not as heavily as the week before. And that's it for the relative strength meter. And the fundamental announcements for this week that is coming up are pretty light. There's not a whole lot going on. We have some more inflation report hearings out of the UK coming out on Tuesday morning. We have annualized GDP out of the US on Wednesday, as well as the CPC, the core personal consumption, quarter over quarter. We have the same CPC on Thursday, year over year, instead of quarter over quarter for the US. Tokyo CPI, excluding fresh food, and this one is actually one that tends to sometimes move the market to some degree. So out of all the ones that we're seeing here, that Japanese one on Thursday evening, and then on Friday, very early morning, the CPI year over year coming out of the European Central Bank will be the more interesting fundamentals for the week. The European one at 5 a.m., that might be a little outside my normal window. I haven't decided yet whether I will be trading that one. But the Tokyo CPI out of Japan, that I will very likely trade. And it's scheduled for 7:30. So that evening, Thursday, we'll have the 8 p.m. session an hour earlier. We'll have it at 7 p.m. instead of 8, which will allow us to do a regular session as well as trade this fundamental announcement. And again, I'll advise regarding the European CPI later on in the week after I have made a decision. And that does move us to the charts for the week. The European charts in particular are looking extremely interesting. We look at the euro dollar, it had a great week. The euro had a great week. It recovered a lot of lost ground against the dollar, and in fact is looking like the beginning of a retracement, one which will have quite a lot of potential. I'm not sure we're there yet, but eventually we will have that that major reversal between the euro and the dollar, and we need to be ready for that. Right now, it is at a significant point of support resistance. So this week will be critical in telling us if it does indeed have strength to try to do a retrace against what has been the trend since the beginning of the year, or if this is indeed just a regular retracement before it continues towards the bottom. So we'll be keeping an eye on that one very closely. Pound dollar, nothing much we can say for the pound at this point. It does stage a little bit of a retracement every now and then, but that's just a normal waving back and forth of the market. In general, the pound is continuing to go down against the dollar, and we can see that playing out here. The beginning of the week had the pound recovering some of the lost ground, and then towards the end of the week, it collapsed again. So not much there that we haven't already been seeing throughout the entire trajectory of the pound drop against the dollar. USDJPY showing a little bit more of an interesting chart. We did have some significant trend lines broken in the past month or so. It did do a test of another trend line, which has failed, and we do have a retracement back into the Ichimoku cloud. So that movement seems to have failed for the time being. We're still short on this one long term. So this is still within the parameters of that trade. It's actually not even a third of the way right now, where we have our stop closer to the prior top. So I would still be expecting on the slightest bit of bad news for the dollar to see the yen regain some of this and hopefully break through these trend lines on its way towards the bottom. That is the trade we're in. And we did have a symposium that the Fed has every year called the Jackson Hole Symposium. That happened this weekend. From what I've been reading in the news, it really wasn't promising for the dollar. The Fed has indicated that they will indeed be raising interest rates next month, September, and that they still plan on doing another interest rate hike, likely for December. So that's been telegraphed to the market. The market seems to have reacted negatively to that over the weekend. Of course, market was closed at the time. The market open didn't see any major gaps with the dollar pairs, but it is too soon to tell. Probably the reaction is going to have to wait for London coming online at 3 in the morning my time. So I'll be looking at that with a little bit of interest to see what the general market says. And then, of course, tomorrow morning when New York opens. But for now, I'm still seeing a very good likelihood of the USDJPY continuing to trend towards the bottom of the chart as opposed to going back up. USD Canadian, the Canadian has had its woes between the fight with the Saudis and the oil prices. We can see that this past week it went in both directions pretty heavily. And again, this explains some of the account results in the short term. It's just going in both directions, taking turns day by day. So we'll be looking for a little bit of more decisiveness from the CAD as well as some of the other currencies, and looking for better opportunities. For now, the USDCAD, I think it still has some room to go down towards Canadian strength, USD weakness, but it needs something to trigger that. That's not been seen in the market yet. For now, it's hanging out at that outer trend line, and we'll continue keeping an eye on it. USD Swiss, a bit more of a promising pair. We are in a long-term trade on this one, which is at profit right now. We had a nice drop this past week. We caught maybe half of that drop, maybe a little bit less. It has broken out of that prior sideways bracket it was trapped in. So it's done a breakout towards the bottom. It's crossed several areas of support along the way. And the trade, obviously, we're looking for it to continue dropping towards that trend line there at the bottom, or that red line from a prior channel. I'll take any of those, but I am expecting a major correction from the USD Swiss, which again doesn't necessarily have to happen this week, hence why it's a long-term trade. But I do think it's played out the maximum weakness it would have around the 1-to-1 area, the parity between the USD and the Swiss franc. So looking for it to not go much higher than that and to indeed start to trend downwards. Could be a quick move, could be a slow one, but I'm looking for it to go somewhere around the 93 area down below here. The Aussie dollar, this is one that I'm really not pinning my hopes on at this point. I would love to see some strength out of the Aussie and for this pair to trend back towards the top. That has not been forthcoming. If anything, it's continuing to make lower lows, but swinging very, very wildly. So it's a dangerous pair to trade because it does tend to go in both directions without any rhyme or reason. The dollar is pretty much the same as the Aussie dollar. They're doing exactly the same thing. Both heading down, both making lower lows, but swinging quite wildly by 200 or so pips at a time without giving any sort of heads up of what it's about to do. So again, if we see a good entry, we'll take it, but I'm not pinning my hopes on either the Aussie or the Kiwi for now. Aussie Canadian. The Aussie's in trouble, the CAD's in trouble. That's about as much as we can say. The CAD seems to be faring better, but you do see that some of these wild swings where it goes deep into one direction and then almost just as deep in the opposite. So there is no safe way to trade the Aussie CAD for the time being. We haven't been able to latch onto a definitive trend for quite a while. Probably the last time we caught a trend was back in March, when I remember we played the Aussie CAD most of the way down. Since then, it has been very erratic. But not that we haven't caught a few good moves. We can see them there on the screen, but it's not the easiest pair to trade. Euro Swiss, we are long on the Euro Swiss right now on a short-term move, and that, as I said, has been playing out quite nicely at the end of the week. We caught most of this long candle from Friday, and that's about all we can say. I'm still looking for it to continue heading up, so eagerly awaiting the London Open to see what that brings. But other than that, I would not be looking at anything long-term with this pair, not yet at any rate. But I'll take anything short-term I can get. Euro Pound has finally broken the prior high. It did it on Friday. Too late for us to take advantage of that move, but we now have a new 20-day high, which is technically an entry signal for one of the systems I'm using long-term. So I'm going to wait for the London Open, and that will tell me whether I want to take this trade wherever it happens to be trading at the time, or indeed wait for a retrace and then try to get back in on the next swing. So I'll be playing that by ear overnight, and of course reporting on that tomorrow. Copy trader will get that immediately. But Euro Pound is very high on my list of priorities for the week. EURJPY, again, we see some euro strength coming back into the market, which I'll cover in my setups later on in the presentation. But we do see it making highs that haven't been seen for about 3 weeks now on several of the euro pairs, EURJPY included. So keeping an eye on that one as well. And moving on. Euro Canadian, again, we see the same thing with the euro pairs. They're starting to go into euro strength, and this is going to be a good thing for us. I'll be looking at entries if that trend continues on quite a few of these euro pairs for the week that is opening. Pound JPY, this one may give us another good opportunity. The yen is weakening against the pound. It weakened for the better part of last week. And you know my thoughts about the pound. There is no strength in the pound right now. I don't expect any strength in the pound. So this movement was pretty much all JPY. And I would expect a reversal at any point and for the pound JPY to head back towards that prior low. So I'll be keeping a close eye on this one as well, especially for the London Open. AUDJPY, not doing much of anything. It is at the bottom of a sideways range. The only good thing we can say about it is it does not seem to be consistently making the lower lows that the other Aussie pairs are doing. So it makes it a little bit easier to trade if it's that range bound, and we'll be keeping an eye on it, but I just don't see a good entry in either direction just now. That may change when I look at the 4-hour charts over the week, but on the daily, it's not giving me much of anything. Euro New Zealand also near the top of its range, and since the euro is appreciating and the Kiwi isn't having a good time, I would expect this prior high to be broken at some point in the near future. I'll be looking for an opportunity to jump in that direction, assuming nothing else changes in the market. So this one is not high on my radar, but neither is it at the bottom right now. I'll be checking it regularly to see if we have any good entries. Pound Canadian, again, pound weakness, and we can see that play out here. Even though the Canadian has had its woes, it's been generally going towards the bottom. We have traded this a few times over the past few weeks, taken some pips, given back some pips. I think a good chunk of the pips on the really good week we had was from the pound pairs, including the pound CAD. So we'll be looking for more entries. I would like to trade this back towards the bottom. It's unfortunate that it didn't retrace all that much. I would have preferred a deeper retracement, giving us more of an opportunity to take pips as it went back down. But I'll take whatever I can get. So the pound pairs will also be on my radar for the week, including this one. And that does cover the charts for the beginning of the week, the dailies. Does anybody have any questions on any of them or need me to go back for any reason? Okay, then thank you. This is my my cheat sheet for the week. The USD pairs, again, I mentioned the Jackson Hole Symposium. It worried investors. It worried the finance people. The dollar seems not to be as strong as it's being shown in the market, and we will probably see some of that US dollar weakness play out this week, and perhaps even extend a little bit further than the week. It has not evidenced itself as yet. I've been keeping tabs on the market as it opened, and I really didn't see any major moves so far. So again, I'm going to be waiting for the London Open to give me a little bit of direction here. But that's my initial gut feeling on the dollar for the week based on the Jackson Hole details that have been given out to the press. It's not looking as if the dollar is going to be having a good week. The euro pairs, we covered them in the charts, so nothing new here. I am seeing that most of them are starting to retrace out of that euro weakness, and we will be looking for some long-term entries probably towards the latter end of the week. The short term, of course, case by case, but I am definitely switching into bullish mode for the euro until proven otherwise. Pound pairs, as usual, we need to look at them. They do give some really nice opportunities for taking pips, but the pound weakness is still what I would be expecting out of the pound pairs until further notice. Swiss pairs, the one I really want to focus on is the Swiss franc against the dollar, because it looks to be breaking out of that sideways channel it had been trapped in for quite a while. So we're already short on the USD Swiss long term. It's already at profit, not a big profit. I would like to see it go deeper. And indeed, this could be a fake out. It wouldn't be the first time. But we'll be keeping a close eye on that one to make sure it doesn't go too far against us, for one. But I do think the stop loss where it is at a very extreme point where it should not retrace that far back up. Again, play it by ear. I'll be keeping an eye on it, but that's my initial assessment, or my current assessment rather, on the USD Swiss. The other Swiss pairs, especially the Euro Swiss, are looking like they're going to give some opportunities for the Swiss to actually depreciate against the counter currency. And I'll be trying to trade that as best I can. We also have that Euro-Swiss trade open going in the opposite direction. And curiously enough, both of them are at profit right now. So the Swiss does seem to be moving in a different direction depending on whether it's against the euro or against the US dollar. Last but not least, the JPY pairs. The yen is showing weakness in general, except mainly against the dollar. That's the only one where the yen hasn't weakened that much, and in fact has regained some ground towards the beginning of the week that it then gave up towards the end. The other pairs, pound JPY, euro JPY, even Aussie JPY, they seem to be going into yen weakness. Not sure how long that's going to last. But the beauty of that is that if we do get any sort of a yen strength coming back into the market, that's not only going to help the open USDJPY trade, but it will give us some really good opportunities in the short term for retracements. Next, our parting words here, and this goes back into what I was saying at the beginning, why having a system is key. There's always been and probably always will be discretionary traders. That's traders that look at the charts like they were something new every day and decide whether they're going long or short. And a lot of them make money for a short period of time. But the only ones that have ended retiring profitably have been precisely those that have retired. And they choose a very good moment to retire. They're aware that trading from the gut really isn't something you can do long term, and those are the few. No one is that good at picking trades over a long enough period of time just by gut feeling. That doesn't apply to systems, however. Systems historically have and continue to outperform reliably 99% of traders. Traders not following systems, of course. We do follow systems, and sometimes we will have, as I said, less than perfect weeks, but the winning weeks over time will certainly outperform and cover for the losers. So like I said, month over month, year over year, we're having some really nice profits. Just don't get too concerned when every now and then we're going to have a negative week, because they will come. That's going to be reliably certain that we will have bad weeks. But month over month, you should see, and indeed we have been seeing, that the accounts continue to grow. That's what a system does for you. Trend following, just to give you an example, has actually been around for centuries and statistically been checked and tested and confirmed. Anybody who's been trend following for a few centuries, not that I expect there's too many of you around, is probably doing quite well today. And that's going to be it for me today. Any comments, questions, or anything else? Going once, going twice. All right. Then I thank you very much, folks. A recording of this will be out momentarily, well, in about 15 minutes or so. And I will talk to you guys tomorrow at the noon session. Thank you so much.